Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Wow. It's a new week. You know, I don't actually know what we got ahead for us this week. We're going to have to do a little bit of research, huh? Let's come in and check where we're at today first. Okay, well, it looks... Oh, okay, yes. I remember! Oh, okay. So on Friday, just before, like, after the markets were closed, but just before, like, the extended session closed, a news headline hit that Moody's, was it Moody's? I can't remember who it was, downgrading the U.S. credit rating. You saw a pretty big sell-off that treasuries have pushed lower, and we basically gave up all of Thursday's gains. So that's kind of interesting. Another day, and we'll be pushing lows of the year. Ooh, that would be scary. Okay, S&P 500 also taking a little bit of a hit from that. Maybe in the mode to recover, we'll see. Oil kind of going sideways here. Gold, silver. Okay. Copper kind of the same thing. Seeing the Japanese yen continue to be on an okay uptrend here. And the Bitcoin took a little bit of a jump, but quickly got pulled back into the range. Let's see what we got coming up for this week. Okay, well, we've got a bunch of Fed speakers today. Let's come back over here first. Got a bunch of Fed speakers today. Actually, we've got Jefferson and Williams both speaking here in about 15 minutes. But let's come and look at the weekly view. Bunch of Fed speakers, flash PMIs. I guess we are into the quieter part of the month. I'm concerned that the factors that have kind of been causing the treasuries to sell over the past few weeks are still there. It looks okay here on the DOM to start out. I would say that for a week where there's not a whole lot of news and a Monday, that the opening range is fairly decent, and there does appear to be a good amount of level 2 activity here as well. So we could have some opportunities. I'm not quite sure, unless it is, well, I am hearing comments on my news squawk here. I think coming from EU people. Jimmy Oreo, we literally voted for bigger deficits in 25. There's no other way. Taxes need to be cut significantly if we want to grow out of it. But I'm not sure that that's true, Jim. I think we need to get away from this idea that cutting taxes will always result in greater tax revenue. Not necessarily. And even if you were to say, cutting taxes will result in greater tax revenue, that doesn't mean that it will be enough revenue to overcome our debt problems. Well, Mohammed El Arian. To further my Friday's post about Moody's downgrade of the U.S., yields on U.S. government bonds are up across the board. Bloomberg table below. Not dramatic, but especially with the 30-year yield above 5%, enough to amplify the conversation about America's political ability to address its fiscal deficit and debt. I mean, if that's going to be the topic of conversation today, and there's going to be a lot of flow coming in because of that, and I'm not sure that there really will be. Last time that we had debt downgrades, it kind of like everybody forgot about it like the next day. You know, now it happened on Friday, so it kind of lingers over the weekend. But you know, like the way that this normally goes is nobody talks about it tomorrow. So I'm skeptical that we would see a huge amount of flow from that, but because it is the big talking point, we do need to keep an eye on it. And I think the bigger thing is that the market seems to be more sensitive to how Congress is trying to deal with the budget right now, because they're trying to pass a budget. Republicans want to They really want to extend some tax cuts and so forth, so. Wow, Anthony Crudelli's got a super long post here. Shall I read it? Sometimes all it takes is a little nudge. Last week, I tweeted about how markets went from extremely oversold to nearly overbought. It felt like a textbook FOMO rally, and a headline was probably all it needed to stall out. Well, I wouldn't call it a FOMO rally, actually. I'm not so sure that all of the upside has been, driven by people really afraid that they're about to miss out and yada yada yada. In fact, I think that the biggest factor on all of this has been short covering. Okay, well, anyways, the latest news doesn't change much fundamentally. It just reminds us the path back to all-time highs won't be smooth. Technically, ES is back below the yearly opening range and still red on the year. That's the key takeaway for me. I don't pretend to know the macro impact of the news. I'll leave that to the experts, but it shows there are cracks forming, and where there's one, there might be more. Gold popped again, continuing to show global demand a small nudge, and the trend looks alive. If the gold rally continues, I expect short-term pressure on ES bonds sold off. Rates ticking up, and while it may not have lasting legs, today's weakness in bonds is weighing on the index. Don't overcomplicate the tape. I've listened to smarter people talk Moody's, and I still don't completely understand what they're saying. All I see is a market reacting to a nudge, probably nothing more than that for now. Okay, so I think that, we just got to see when the market opens what the S&P 500 does. Do you take trades on stream or just talk and give us information? Sometimes I take trades on stream. So let me tell you something, JWR. If you're looking for a stream that's like, I don't know what I'm doing, and so I'm going to follow Seth because he's a good trader, then go somewhere else. Because, number one, I'm not necessarily always the greatest trader. Like, I have periods where we're really good. We have periods where we're really bad. But number two, I don't really want people to follow me. I'm kind of more of a teach people to fish than just give people a fish, or it's kind of like, really, it's like we're making lures. I show you how to make lures. You can't copy my lures. They're copyright. So, I don't want people to follow. I want people to come up with their own way of trading. Now, if you follow this stream, I think that you will be better prepared to handle the markets than any other set of retail traders. I really believe that. We do a good job. We have some really key insights that really give you a leg up on your competition. but in the end, it is still retail trading. So most people are going to lose still. All right. So don't come and follow. Don't come to follow. Come to learn. But I do try to help you guys in like what I am seeing, and part of what goes on here is, you know, we talk back and forth and we kind of figure out what's going on together. So it's a team effort. Good morning, Uzi. What do you mean, Captain Price? How did it advance? Oh, I'm gonna become a waiter if they pass the no tax on tips. Seriously. From years ago charts? Well, first of all, I don't necessarily know that, like, what did it do last time the chart looked like this mean anything. But, like, are we talking about last time that there was a debt downgrade? Because I do vaguely remember last time that there was a debt downgrade, you know, everything's selling off, and then when they open, coming back up. And charts look okay. $18 was last month's low in ZB. Okay, that's a good thing to point out. You know, on our charts, I pay attention primarily to ZN, but ZB, yes, we did touch. The low of the year in ZB was just at the beginning of the year. So I think that this is a good point to teach about something, though, that I think is really important to realize, okay, is that the market has a long memory. So we think, there is this fair value, and like the fair value hasn't changed. Or maybe we say, here's fair value, but like now it's changed. And how do we know that? And all of these sorts of things. But really the truth is the market is just a reflection of the people buying and selling. So when you get a sell like this, the tendency of the market is going to be to just maintain that price. Markets are inelastic. So, wait, we come back over here. Elastic would mean it's hard to get away from that value. It's going to get it pull it back, right? Inelastic means you pull those fingers apart, the rubber band just stretches. It can stay there. So, back over here, something happened. We still are not quite sure what or who, but somebody sold treasuries like Mondo crazy here. Okay. And we've been getting it through here as well. I do suspect that there could be some foreign countries continuing to sell. Like, think about all of these countries that are trying to negotiate trade deals with the Trump administration, and they're thinking, well, you know, if we continue to sell a little bit, that might help our negotiating position. Like, that literally could be going on. So this is a permanent impact, and then we're going to go from here. I actually think, personally, I think that fair value is actually probably somewhere up here. I think that 4 to 4.25 makes more sense, given current conditions and everything. I'm really not that concerned about inflation at the moment. Like, I mean, for one, the trade war is kind of dying down, and the impact of the trade war on inflation was kind of questionable at best. And you're seeing some deflation, which would also be an effect that you would expect to see at some points during a trade war. I really don't think that it makes sense to raise interest rates when you're seeing, raise interest rates. I don't think it makes sense to raise interest rates when you're seeing inflation from tariffs, because increasing the interest rate ain't going to change the tariffs, right? So you're just hurting yourself unnecessarily. Now, if the economy is doing really, really well, and the economy continues to do well despite the tariff increases, you do want to keep things relatively tight. But they're already tight, probably too tight. So I still think that the Federal Reserve cuts interest rates this year. I think that I have to acquiesce to the rest of the market here, because they have said it's not going to be June, and I think some of them are starting to say it's not going to be July. Yeah, Uzi, this is a kind of a weird thing. The other rating agencies have dropped the U.S. credit rating before. Yeah, so all of the headlines that came out made it like that this was an unprecedented thing, but it really isn't. Is Moody's cutting it more significant than the other rating agencies cutting it? Yeah, S&P downgraded it like in 2012. So here's a couple of issues that I have with this. Number one, okay, so maybe we don't like the U.S. credit rating right now. Is there a country that you think should have a better credit rating? Like the Germans right now, they had to rewrite a huge portion of their laws to be able to take out more debt to spend on military, right? Like, I don't know if that's necessarily the good call. And China, well, okay, you could go and buy Chinese bonds, but just realize that they continue to manipulate their currency, and so whatever you might make from their bonds, you're probably just going to lose in currency depreciation. like in terms of where large fund managers keep their money, I really don't think that this credit rating changes that. China's sovereign credit ratings are currently rated at A+. Yeah, well, okay, so this is another interesting part about it. Is that the reason that that they're bringing down their credit rating is they're saying that the chance that the United States defaults is higher. Why is that? Because we have a credit limit, and if Congress doesn't raise that credit limit and all of these sorts of things, then you could potentially get in a situation where if it goes on long enough, they don't pay. Of course, in the event that would happen, it would probably just be eventually that government impasse passes, and then they pay it afterwards. So you see what I mean? Like, what it reflects, I don't think necessarily means what people think it means based on when they're just reading the headlines. Like, I go and I read the commentary online. I don't think that it matches up the reality. And again, like, how does this change flows? I really don't think it does. Really don't think it does. Western Europe green. Okay, I don't know what you're talking about, but or another. So here's another list of countries by credit rating. Okay, so then here's my question for you, Captain Price. Are you moving your money over to China right now? Or maybe you should move it over to Australia. Move all your money to an Australian bank. Go buy a bunch of Australian stocks. Oh, you put it in cryptocurrencies. What do you think? What do you think Moody's would say if they had credit ratings on cryptocurrencies? I know it doesn't really make sense, but I gotta be a thug with gold. So I brought, by the way, while I'm thinking about it, because I brought this up last week, but I want to continue bringing up, there's different people on watching and all of that. There is a bill in Congress to regulate issuance by stablecoins. And the rules are basically as such that if you are issuing a stablecoin currency, you have to follow these rules. There are rules around what kind of assets you can hold to back your stablecoin. There's requirements on auditing and all of this sort of stuff. A lot of the commentary that I saw online kind of was like, well, this will be a way to legitimize cryptocurrencies, and they're all very, very supportive of it because of that. But my reading of it is that this basically makes Tether illegal. And if this bill passes, it's actually a really big problem for the Bitcoin community. They thought that the bill was dead because it included some provisions by Democrats to kind of go after Donald Trump for his meme coin and all of these sorts of things. But it sounds like they've taken it out. The bill is kind of back on. We'll see if it goes. I think that it could pass. I actually, I didn't read the whole thing, but I did pull the bill up and read a significant portion of it, and I'd say I'm broadly supportive of the bill. It's not perfect, but I think it's pretty good. So, and a lot of people I think kind of dismiss it just because it failed, but I think there's a good chance that it does pass. So if you're in cryptocurrencies, that's something you will want to keep an eye on, because I do think there's a chance that when this becomes law, that the existing stable coins have issues. It could just give the US government an opening to really start investigating Tether more directly. So you know what? Yesterday, I got a new, what do we call it? For the shelf behind me. Probably nobody even noticed. I bet you if it was white, nobody would have noticed. But it's glass, and I got that because I can lock it. And my hope is that when the kids come in here, that there's not really anything for them to destroy. So we can be in here, and I can play, and they can come in and out. And I think that'll be a better situation. I think we get more work done that way. But I cleaned it, and I can smell it. I can still smell the glass cleaner. So I must have gotten some glass cleaner somewhere that hasn't evaporated or something. I'm gonna go check it, because it's starting to bother me. Just open it up and we'll see if that lets it air out a bit. Let's see here. Fed's Williams says the Fed has a ways to go in shrinking its balance sheet. Balance sheet drawdown not affecting market prices. Dollar remains the world's reserve currency. Global investors still see the U.S. as a place to invest. We are not seeing major changes in investor interest in treasury bonds. I don't know if that's accurate, Mr. Williams. So here's a question. If the treasuries go lower, how much lower will it go? Will they dip down for another new low, multi-year low? Yeah, it would be a multi-year low. Like, that's the next stop, is the lows and then new multi-year low. Does that make sense to anybody? Jimmy Oreo says 10-year treasuries have plummeted to levels not seen since Thursday. Yeah, but I was concerned about the levels that we were at on Thursday. So, like, I think we can safely say that the reason for Biden's so-called decline was probably a result of them managing his diagnosis. Oh, dude, I totally forgot about that. I totally forgot about that headline. Okay, so the headline is that Joe Biden has an aggressive form of prostate cancer. Biden didn't suddenly get stage 4 cancer that's metastasized to his bones. I actually... Okay, so I'm told that it does come on fast. You see that, so this is something, because I've been seeing people on, I've been reading about it online, I guess. And that's what you're saying is definitely like the commentary, right? Like that's definitely the line of conversation that I've seen. I'm not a doctor well enough to know what the truth is here, but people told me that the aggressive cancer that he has can happen very quickly, like in a 3 to 6 month period. So I'm inclined. He realized he had it when the tape came out. Well, that is an interesting timing, isn't it? Prostate cancer can linger for years, even decades. It's more common for us poors and normies to not realize it because we avoid going to the doctor, but not a man with access to the best medical team on the planet. Right now, I don't think that I really know, but I'm inclined to believe that his mental decline during his first term was not necessarily because they knew he had cancer. I think that his mind was just going anyways. But did he know? I mean, I don't know how much that matters. So they couldn't outright give him chemo. They probably had him on a bunch of painkillers. I don't know, man. So there's different levels of this. That's the thing that I think is really kind of wild about this is that, okay, did we know during his first term? How much of his first term was overshadowed by this? Right? Because I think it's pretty clear. I think the thing that the tape, because sorry, what would we call the tape? Basically, he did a deposition with the FBI, and they said that his answers were incoherent and that they couldn't prosecute him. And everybody was like, okay. And then they wouldn't release the tape. But now we got the tape, and it's like, actually, yeah, he kind of sounded like he had dementia. That was early on in his term. So it seems to me that Biden wasn't all there for pretty much his whole term, and that it wasn't really him running things. That's what I think that thing means, right? So then we get this cancer diagnosis, and the question is, how long ago did they know? Did they know that he had cancer when he dropped out of the presidential race? I think there's a pretty good chance. Like, it sounds to me like a cancer like that can appear in that time window, but probably not. So I think that there's a very good chance that he did know when did he know when he decided to run again? Because that, there was like when he announced his run, but then there was like, when he really decided that he was going to do it was like a year before that. So did he know when he announced his presidential campaign? Here, again, a cancer like that could certainly have shown up since then, but it's also possible that he did know. And you're right, nobody's going to admit it. Although I do wonder, like, part of the thing here is there's a lot of people that knew, a lot of people in journalism, and they're all coming out now and being like, yeah, we knew, and now I'm going to write a book about it, how terrible this was. And it was like, you helped cover it up. But I think in their minds, it was like, well, it's not my place to do that. And if I'm the one that like breaks it, me saying something that he's not all there probably wouldn't have changed anything, because there was certainly people reporting on it and they just said, oh, that's a cheap fake. Right. And all it would have done was like remove their access. Right. So I think that's the way that they justify it. Right. But now that Biden's not in power and you don't have that particular factor going in, that like, oh, I need to protect the Bidens because that helps my news station or whatever. Maybe somebody comes out and tells us that we've known this for a long time. Yeah, it not coming out until after he's out is absolutely not conspiratorial. It's not. I don't think that it's proven, but it's not like a huge conspiracy theory to say that. We have enough evidence to say that it's pretty plausible, if not likely. But here's how I would tackle this. Because what is really our job, right? Our job is to understand and predict what is going to happen in the future, right? So I don't necessarily care what the condition was. Well, I mean, I cared at the time. We said that he wasn't all there and that mattered politically, right? It did matter politically. Like seriously, it did come out, and it's destroyed the Democrat Party. It's just absolutely decimated the Democrat Party. And we said this was going to happen at the time, and it happened, didn't it? That was a good prediction that we made. Now that it's in the past, I don't necessarily, I mean, it only matters now in as much as, like, will one scenario or the other continue to cause future political impact, right? And so from that perspective, I see you're already getting at it, right? Now they're going at this auto pen scandal, and I'm curious how that works. If Biden wasn't the person making appointments and stuff, how does that unravel? I agree. So I think that the risk of further negative headlines for Democrats is extremely high, because there could be reports about that they knew he had cancer earlier. I think that's something that I would kind of be surprised if we didn't see today or tomorrow. An anonymous source saying they knew that he had cancer way back last August, or whatever it is, or that they only found out recently. Could be the case too. I mean, there is a point at which you're actually diagnosed. They say, "Oh, you have it," but they tell you, and maybe that was just this week. Who knows? And yes, the Republicans are going after the auto pen thing, and that I think matters too, because one, it's going to be negative headlines, but number two, you can question now pretty much every order that happened under the Biden administration. So the way the auto pen works is it's like a little machine that you put on the document and it signs it for you. So anybody that had the auto pen could potentially sign something as Joe Biden. And since he didn't do it on camera or anything like that, there is now this legal question about whether any of the orders under the Biden administration were legal. And I sometimes do kind of wonder, because I didn't think that Joe Biden would go all in on the student loan forgiveness thing. And he did it. But then now I'm like, but was it actually Joe? Like, nothing that Joe Biden did during his term. I've always viewed Joe Biden as like very, very liberal in character and tone, but not necessarily in policy. And that was kind of the way that he ran, was like, oh, I'll be a moderate and we can get things back to normal. And then it wasn't like that. It was like a very, very activist administration, much more activist than Obama was. And I'm the whole time I've kind of been like, I don't think that that's Joe Biden, right? My explanation at the time was he's, his staffers and all of those people are the ones that are pushing him to do it, and he's just, he's going along with them. But now we have to ask if he wasn't doing those things at all, had no clue what was going on, and it was just being run by his staff, right? It was just being run by his staff. And I don't know where that goes. Part of me wants to say that sort of a thing, it just kind of dies and everybody forgets about it. And then we'll, 4 years from now, when somebody says, oh, that would never happen, and we'd be like, well, but we kind of did happen, or we think that it happened, right? But actually, no, I think I disagree. I think that the Trump administration is going to pursue this, that they're going to continue to look at whatever kind of legal avenues they have to strike down any executive order made during Joe Biden's term. So that's something that we're going to have to pay attention to. Is there an executive order done during Biden's term that we could mark as illegal that would have material consequences for the markets? Well, I can't think of any, but maybe if we all put our heads together, we can. And you know, the other closer impact that I think that this has is, you know, a lot of people on the left are looking forward to the midterms, thinking that they'll do well in the midterms. Republicans at the moment seem to have more low propensity voters, which is to say that they don't seem to do as well when it's the off year, when it's not the presidential election. And, you know, there's been a lot of drama with the tariffs and everything. So a lot of people might change their votes and Democrats could do well in the midterms, right? Well, maybe not. Because first of all, the map is really, really difficult for Democrats this time. And second of all, we just found out that Joe Biden has cancer. And maybe we knew that he had it all the time. So whatever goodwill or people that would be willing to go out and vote because they didn't like tariffs, I think there's just as many people that are going to stay home because they're just completely disgusted. I got to tell you, man, when all this stuff was happening, it was kind of funny and entertaining to me. But when I heard that Joe Biden had cancer, okay, you were faster. So Uzi, I saw you say that, and I didn't see the market really doing anything. So I was like, maybe that's not a big deal. What Uzi wrote was China, U.S. undermines consensus reached in Geneva talks. And then what was this? I don't know what the second part of it was. But when we heard the second part of it, the treasuries rose. Well, I think it's worth a shot. Maybe not. I'll pull it. China vows to take measures if U.S. insists on going its own way. So it's kind of curious because we don't really know what's prompting that, right? Something going on in their talks that they don't like. What changed? Vows to take measures if U.S. insists on going its own way. Yes, that was the one that I heard when the treasuries kind of floated up there. No details yet. Yeah. So we have been going into a period of like less policy uncertainty, at least compared to what we had before. But was that the peak? Is this where things get rocky again? The way that this tends to go is that you do get a good sell today in SPOOs and volatility for a few weeks, but that in the end it's a buy. So, well, the flow here is a little bit curious because there was definitely a positive flow. Oh, by the way, I never turned my robot on. I should have turned it on. I wonder if it would have taken a trade there. But there was a meaningful, I mean, and we were at the lows here too. There was a meaningful change in cumulative deltas. So now there's some iceberging. So that's, I tend not to like that, right? But I suppose what we could do if we're really worried about getting left behind is I can put something like that. But I kind of suspect that they might revert back to this kind of node at 24, 23 half-ish. still have to prove that it was auto-penned, maybe. It may just be the case that they decide from then on that you can't use an auto pen, that the auto pen is illegal, or maybe Congress makes a law about it. Some law that like there has to be so many people present and for the signing and all these sorts of things. China Commerce Ministry on U.S. statement on Huawei chips. We urge the U.S. to stop discriminating actions towards China. Wait, what did the U.S. say on Huawei? "5 days ago, U.S. warns against using Huawei chips anywhere in the world." That was 5 days ago, though. Is it just off of that? This might not be as big. Maybe, because the headline that I'm hearing kind of seems like a big deal. Like, oh no, is the trade deal falling apart? That would be a pretty big deal for the markets, right? But and it was enough to go across range, but it's not enough yet to really, really meaningfully break it. Perhaps because when you really think about it, it's like, okay, China is putting spyware in all of their Huawei chips, so why wouldn't use them? And then China's like, you have undermining our consensus. Yeah, I wouldn't care about that. How do you get around that in trade talks, though? China wanting to put its tentacles and everything? It's a good question. There's this kind of interesting conundrum in relation to all foreign relations, really, that every country is going to do whatever is in its powers for its safety and security. And the things that they do can potentially undermine the safety and security of other nations. And so what you do is you just pretend that that's not happening, and right? Okay, there was a meaningful uptick there at 25.5, so I might get stopped in here. I'll put a limit order here too. Okay. Well, that order went about how I wanted, to be honest, so. Fortunately, they're not taking out 26.5, but I did get filled. Like, the stop part of it worked okay. Okay, well, iceberging at 25.5 and 26. Down tick. And actually a little bit of a shove back up that did not hold. That's a story from Zero Hedge. It won't be Moody's that kills foreign treasury demand. Well, I'm not liking the way this is going, is it? Put the order up there and they're like, oh, okay, let's go and get him first before we mean revert. All right, you got me. From Bloomberg, Moody's downgrade is unlikely to change foreign demand for treasuries significantly in the absence of a government shutdown. A more material impact will come from where tariff rates settle and by how much this reduces the U.S.'s trade deficit. Treasury TIC data released Friday shows that foreign demand for treasuries has remained steady. The data is lagging, going up only until March, but shows that overseas treasuries demand remain fairly even, rising about $230 billion from February to March versus an increase of $340 billion in the previous month. Yeah, that doesn't help. We need the April data, unfortunately, before I would be, oh, we're safe. Foreigners are the biggest constituent of the treasury market, holding about 30% of outstanding, or around $8.7 trillion. As the chart above shows, most of the main regions of the world's holdings rose by less than in the latest period than in the previous one, except for Canada, which, despite the 51st state rhetoric from President Trump, increased the pace of accumulation of its treasury holdings. Likewise, the home of many hedge funds, the Caribbean. Asia's net holdings actually fell in the month of March, with the entire net fall driven by China. Although disappointingly for the China hitting the sell button panic brigade, the amount was only $19 billion. Yeah, but again, that all happened in April, right? Let's come back over here. The cray-cray, all the cray-cray stuff happened in April. So... will the Moody's downgrade push other parts of the world to become similarly more reluctant to own as many treasuries? It's unlikely that alone would do it. As I mentioned earlier, there is some near-term risk if the downgrade emboldens fiscal conservatives to vote down an extension of the debt ceiling, or, much more important, will be how much tariff policy ultimately affects the U.S. trade deficit. It is that which creates foreign demand for dollar assets, and therefore, if it falls, foreign demand for treasuries should fall too. Whoa, okay. How of much more import will be how tariff policy ultimately affects the U.S. trade deficit. It is the trade deficit which creates foreign demand for dollar assets, and therefore, if it falls, foreign demand for treasuries should fall too. This is a very, very interesting fact that they are pointing out here for us, I think. That... perhaps the move is short treasuries because if Trump's policy is actually effective at reducing the trade deficit, then it would reduce demand for treasuries. Also, the ratings downgrade is unlikely to lead to any forced regulatory selling. U.S. debt is not Greek debt. It has no obvious alternative. So unlike the risk from forced selling of Greek debt when it was downgraded, any U.S. downgraded will be accommodated. Finally, overseas demand for treasuries has been largely from non-central banks in the years since Russia reserve assets were seized, and so such private holders will have some degree of price sensitivity. That's the shape of the upcoming tax and spending bill and what it means for the fiscal deficit will also hold sway on foreign holders' allocation to U.S. government debt. Is that really? I mean, I knew that was kind of like a little bit of a thing, but I didn't realize it was that big of a deal. That you know, when they seized Russia's assets, like that was a big deal. But I didn't realize that other countries were reacting to it. So. Looks like the algorithm would have been long from 23. Interesting. Okay, well, I was able to get a few contracts there, but it's still a little iffy. Okay, so Jefferson was asked about the Moody's downgrade, and he gave them a non-answer. Come on. There we go. Kind of felt like it was a little bit too hard to get that felt, but in the end, they took it. And everything pulled, too. Okay, well, I want to know, Solar's cost basis is at 27. So this is kind of the interesting situation, right? Hard to stay below that line for long, but, you know, that's a trend day. We were having a trend day down. Now we've come back to that line. Is that the end of it? Or do they cross? Hard to tell. If we had taken the long down here on expecting a reversal, that was your first kind of take profit spot though, right? The other side. That's a relatively large gap. Like I said, like there's stuff going on today. Actually kind of makes it I guess what we should say is that we were getting net selling, like the flows were sell. And then this news came in and kind of shifted that around. So is that news enough to completely flip on its head? Could be. Right now, it's not really acting like it's like a huge deal, though. So. Now you're kind of in this situation where, okay, if you want to buy on a limit order, well, you can definitely get filled at 26, right? But if I want 25 half, I don't know if you'll get filled. And if you do get filled, it's probably fallen out of the range and it's a bad thing. So. So I started browsing Reddit here, and here's a thread: RSI MACD, all lies. Once I started following smart money in that, then I'm immediately like, oh, okay, so now you're going to tell us more bullshit stuff. Gotcha. Now I watch liquidity zones, fair value gaps. Yeah. Of course, he got downvoted. I'm great. I think that Reddit is probably the worst place to go for trading advice, but at least they are starting to downvote all of the smart money concept spam. So that was a good hit into 27. Even the wise can drown in the deep if they mistake every ripple for the tide. Is it clarity you found or a new form of noise? Size at 28 is pulling? I don't know. What was it before? What I will say is there is a lot of level 2 changes there. This whole kind of area in here, there's just like constant shifting. It's a pretty good clear at 27.5 as well. I was wondering when Octavia said long at 26, and I was kind of like, well, I do think that it's going to go a little bit further, but I was really upset about that I only got 25.5. I was able to bring my cost basis down to 24. Okay, that's maybe acceptable. But it kept going. It wasn't like it was a bad trade. It was just like, okay, but like, what's the chance of adverse excursion on this? Well, it looks like we're in the clear, so now we just got to figure out the right spot to get out. Well, there was some size at 28. It is now pulled back to like normal liquidity because it was like 35 before. So I'm going to bet you that they do have to trade some contracts to get through that. That it doesn't just pull. There you go, 4,000. Okay, so if they trade through it, it might not be 4,000 contracts to trade. Because when like 100 contracts went through there, a lot of that did pull. Went down to 20, at least 1,000 of that pulled, right? I didn't get a click, but it was a significant portion of it canceled. Varix, good morning, welcome. I lost track of where we were at. Was it 28? It was 28. They did trade 3,000. Well, this has been about a 20,000K change. Yeah. Okay. So I'm getting kind of the low resting liquidity at 28.5 back and forth, and 10,000 has traded there. Oh, that's so funny. Octavia's got out of the same spot. Let's like recenter it right there. Just so that if in the next 20 minutes it does go up further, we can be like, oh, remember when we got out and it was all the way back out here? That was so stupid. But no, I'm getting the early signs. That was my exit right there. So. $14,000 now at that spot? Yeah. Do you think it becomes point of control? I bet you it will. I bet you it will. Granted, it would be a little odd for them to like stop here and like reverse, okay? I think that they build this out to like the new point of control, and then maybe after we're gone, they go for another leg. Especially since that 110 looks awfully close. What? Carlos Boozer hired as a scout for the Utah Jazz? Carlos Boozer is going to be a scout? What? That is really odd to me. Okay. I liked that guy. He was a good player. Please scout your twin sons onto the team. Oh, maybe they're going to keep going. Maybe they're not going to make 28.5 the new point of control. It's okay. Got a good trade out of it. So the issue on my end here was like, I do think that they're going to go higher. Like I think it's very likely that we reach 110 today. I think it's a good chance that we get above 110 today. The problem is I don't know when that's going to happen. And I think that that's going to be after we're gone, because we got 15 minutes left, right? So when I started seeing that volume at 28.5, I said, yeah, that's probably the spot. Now notice here, we are like, we're in the area of low resting liquidity. So like when more volume came in, it pushed them up 2 ticks, but look, they settle back to 28.5, which is something that we often see when we're kind of at the end of that, is like they get in a trend and it goes further and then it comes back. And it kind of like when it goes further, that makes you think, oh, the trend actually wasn't over. We get back in, and everybody gets back in, and then they get trapped, right? It just means this whole area.
Order submitted.
Is is possibly low latent liquidity. Okay, well, that's curious that the robot decides, oh, because did it take a short there? It did. That volume after the rise there was enough to trigger it into a short. It's probably too sensitive, but Trump warns American business, eat my tariffs or pay the price. You know, I didn't bring this one up, but I probably should have. So Walmart did not do so well on Friday because they were basically giving price warnings saying, well, we're going to have to increase our prices. And Donald Trump didn't take too kindly to that. And so Donald Trump tweeted out that, you know, Walmart makes enough money and they should not raise prices on their customers. They should just eat the price increases. So this kind of creates an interesting political dynamic because that is not a very pro-business thing to say. And it's the kind of thing that I would expect to see a lot of leftists say. This is the sort of thing that liberals will say, oh, Walmart makes so much money. They don't need to make more money. Well, like, the margin that they make is really, really small. Okay. So first of all, the margin they're making is only like 4% or something like that. Okay. So they're not rolling in it. All right. They don't have a whole lot of room to give. All right. And, it kind of seems to me that they already have eaten it. Here's the thing. If there's any company that has benefited from trade with China, it's Walmart, right? So I would expect that if we're going more towards reciprocal trade and evening out the trade balance and everything, that Walmart would be the one most at risk. Can they adjust in that situation? I don't know. But they would be the most at risk. It also seems to me that they've already kind of been absorbing it. Like what we got in PPI, and we don't necessarily know how much this applies to Walmart, but what we got at PPI was essentially, oh, companies are eating it. They're not passing it on to consumers. They can't because there's not enough demand. Wow. He did not develop it in the last 100, 200 days. He had it while he was president. He probably had it at the start of his presidency in 2021. I don't think there's any disagreement about that from MSNBC. Dr. Zeke Emanuel on... Oh, okay. So there's an actual doctor saying that? Okay. Well, that carries a little... I don't know who that is, but... But I think they're saying that, like there's definitely a point at which... you're first diagnosed, right? But I think that they're saying that the stage that it's in must mean that it's been around for a long time, huh? We just need 300 more contracts. The guy is selling $66 Bibles and 400. Well, I don't think that he's saying that they're price gouging. I don't think that was Donald Trump's point. Number one, I think that he's just saying it because that's the thing that he knows will affect people the way that he wants, right? So he might even know that like that's not very good for businesses. That's not a very Republican thing to say, for sure, right? But he knows that there's a certain population that's going to like it, and they're the ones that he depends on the most, right? So that's probably why he's saying it. But no, I don't think that he's saying that they're price gouging. I think he's saying, like, listen, Walmart, the reason that, you know, the Waltons are like one of the richest families in America is because of trade with China. You've been benefiting while China's been ripping us off. I'm speaking as Donald Trump. I'm not necessarily saying this is what I believe, but it seems to me like he's saying you benefited while China was ripping us off. We shouldn't feel bad for you when you're struggling when we try and get more balanced trade. I think that's what he's saying. But the problem I have with what he said was, okay, the Walmart should eat it. I think they already have. I think they already have to an extent. And the issue is you can only eat so much of it, right? Like, you can only eat so much of it. I think there's this idea that, like, oh, corporations should sometimes they should just lose money. Oh, well, okay. Like, if you let that happen, that's how you get really, really bad recession. I'm sorry, guys. Like, businesses have needs too. Things that are good or bad for the business, and sometimes those conflict with what the rest of us would want, and they have to do what's going to be best for them. Now, I think that there's very much a thing where businesses will do things that are like good for them in the short term, but aren't good for them long term. That's definitely a thing. There's a lot of companies like Microsoft right now. Microsoft laying off people, and they were laying off people that had been working at that company for a very, very long time. And they're scrimping down on projects that I think are important. I don't have very much confidence that we're going to get a good operating system from Windows anytime soon. Kind of makes me wonder in this situation, is Linux going to really make a meaningful dent now? Because I think there's enough people that are upset with Windows and looking at Linux. And then if we're not going to get a new version of Windows to kind of catch up, then maybe we will see more people make the jump, right? But I think that what they're doing at Microsoft, like, maybe they do need to scale down a little bit, but it seems to me that what they're doing is probably going to hurt them in the long run, right? But there are some cases where a company needs to slim down or whatever the deal is, you know, and I just... Isn't the premise of the greatness of capitalism is to allow the free market to function without any intervention? No, that's not it at all. You know, this is like my big pet peeve right now is if I go to like late stage capitalism, for instance, right? Or you go and you argue with communists, right? What are they focused on? They're focused on how the capitalist ruling class is stealing labor from the underclasses, essentially, right? Like, you made a thing, it's worth X amount, and the majority of that profit is going to the corporation and the shareholders rather than the workers. And that was basically Karl Marx's whole argument, okay? The whole thing was he had developed all of this economics and math to try and explain that that labor was essentially being stolen from them, okay? Now, there's all these logical issues with it, you know, like how if there wasn't the people willing to take the risk and invest in things, then nobody would be making money. There's all those arguments, and that's commonly how they argue about it, right? But the way I view it is this: the fundamental problem that you're actually trying to solve here. The communists don't understand the fundamental problem that we're trying to solve here, which is that there is people that make things and there are people that buy things, and they have to come to some sort of an agreement. And in order to do that, there's a lot of information that's involved in doing that to come to a fair price. And without a market, there's no way to transfer that information. Essentially, like any information that you do have, you want to keep it to yourself. You don't want to tip anybody off. You don't want to tip people off to what you know, because that it's better for you to keep it to yourself. But when you have a market, now there's an incentive for you to share that information with the rest of the market by trading on it. See? So that is actually the fundamental problem that we're trying to solve, is how do we facilitate the information transfer between agents in an economy about supply and demand? That's really the ultimate problem. And the main reason, in my opinion, that communism and other economic systems competing with capitalism have failed is because there is no real practical way to solve that problem. There's just too much information, too many people that have to be shared. A market is the only way that we have of getting all of that information together. It's just the only way. So all of this other stuff is kind of secondary to that. The thing that makes this work is that we know where supply and demand needs to get to. Okay? So some of these arguments that libertarians make, they don't really make sense. They think everything should just be the free market all the time. Well, I don't agree with that. I don't agree with that at all. Markets are prone to endogenous shocks. You will have to intervene. You will always have to intervene in points. Government will always be involved. And people complain about when government gets involved, but I tell you, if you was laissez-faire, you would be very upset that the government's not doing anything, okay? Especially the past 20 years, man, it would be so bad if the government never came in and did anything, okay? No, I'm not a libertarian. What can I tell you? And if you really understand the market and what's going on, you wouldn't be a libertarian either. Because now we understand, okay, the reason that capitalism is so successful is because we're able to share information between supply and demand, okay? But we also know all of the empirical properties of markets, and they're kind of stupid. It's kind of silly. When you really understand it, it's kind of silly. This idea that you can just let the free market run, and if you let the free market run, that will be like the optimal solution. It's stupid. It's a stupid idea born of ignorance. Sorry if you're a libertarian, but it is. You really understand the mathematical properties of markets, how this works, why it turns out the way that it does. Laissez-faire is stupid. What do you consider myself? Well, my place is not necessarily to tell people how things should be. My role is to explain to people what is and the consequences of that and what may be. Because we're trading, right? So we're trying to predict the future. So I'm able to say that within this context because I'm telling you something about the way that the market works. It's not we want to think that it's perfectly efficient, but it's not. There's like some serious problems in it caused by like the very rules of the game. They're mathematically inherent in the way that the rules of the game are set up. They cause problems and that will require intervention in places. So who is to say when there should or shouldn't be intervention? Well, I think the thing is that you will always get to a point where if you don't do something, it's going to be like the end of civilization. Right. In 2008, we kind of let it go a little bit further than we should have. But because of laissez-faire. But if you go back and you look at the history, it always turns into this will be the end of civilization if we don't do something. And that's when they intervene. So we have a Federal Reserve, they're a board, and they have a certain mandate, and they're the primary mechanism through which we deal with that. And when monetary policy isn't enough, they tell Congress, and Congress knows what they need to do. I might not necessarily like the solutions that they come up with. The way that the Federal Reserve does it, they make lots of mistakes. Congress makes lots of mistakes. You got to just accept that the world is very imperfect, right? This expectation that is just going to be, everything's going to be perfectly efficient all the time is kind of silly, right? We should, it's more fun this way anyways, right? Enjoy the chaos. How do you think 2008 should have been handled post-crisis? Well, I think that they should have intervened much sooner. And should banks or so forth have been punished harder? I think that there are probably some individuals that could have or should have been prosecuted, but the 2008 crisis was primarily a failure of systems. Part of it was that the banking regulations kind of all punished banks in a way and rewarded them if they did the mortgage-backed securities. So, of course, everybody got the mortgage-backed securities. This is why there's this big push in the financial industry right now to change the way that treasuries are counted in their balance sheet, because the way that it is right now, the banks are kind of punished for holding a lot of treasuries. It's and then everybody says, "Oh, that's deregulation." No, it actually would be a really good thing. It was kind of an unnecessary rule implemented by people that don't really know what they were talking about and just thought that the reason that the crisis happened is because we weren't regulated enough. Did you see 90% of the economists at the Fed are Democrats? Oh, I didn't see that. But you know what, Octavius? The issue is that conservative economics is a joke. People think that conservative economics is Austrian economics, and Austrian economics is a joke. Austrian economics is basically reject empiricism, is what there is. So that's why there's not a lot of conservative economists. Part of maybe what I'm trying to do is I'm trying to convince people that are conservative that there is a place for you in economics, right? Because really what conservatives have been saying is hey, all your little formulas don't explain everything. They don't. And now I think we kind of understand why. It's because of complexity. So we really have to do all of the work to understand complexity in order to understand the possible consequences of certain laws and decisions and so forth, right? I think that the world of economics would be greatly served by more conservatives going into it and more people studying complexity economics. So go study complexity economics. If you haven't read it, there's oh yes, Making Sense of Chaos by Dwayne Farmer. If you haven't read that book, go read that book. All right, but it's time for me to get going, guys. So I will see you tomorrow. We had a good trade. Somebody asked me, do we take trade? Well, I took a trade today, so cool. It was a sim trade, but it was okay. It was an okay trade. I'll see you guys tomorrow. Stay excellent, team.